for Star Wars fans out there. Today's going to be really quick. I know this week we want to focus on bounce style trades. So last week we talked about breakouts, different ways of doing that, pros and cons behind it, strategy behind it, so that you could get something on paper and start doing some homework, right? So you could spend the weekend looking at back testing trading ideas, potential strategies for yourself. This week we're going to talk about bounces. However, I'm really short on time this morning. I got some things stacked that I've got to get to right away. So we'll talk about the bounce strategy beginning tomorrow morning. Right now, I'm just going to run through the markets really quickly. We're going to have a look at Forex. We're going to talk about some key levels in futures and in crypto, and then let you guys get on your way. This is a pretty busy week. Oh, darn it, I didn't get my other screens added in here. Let me get these other screens added here. And yeah, so over here, it is a pretty busy week. Let's have a look at what's going on. There's a lot coming up for us this week. A lot of news, high impact news that could potentially be market moving, or at least a catalyst for movement or continued movement within the marketplace. So beginning tomorrow, we have manufacturing. This is a biggie for us. It's at 10 a.m. Eastern, 9 a.m. Central. And we also have a lot of stuff in the Eurozone. So for those of you that are trading in foreign exchange and you're looking at foreign currencies, there's a lot of foreign news as well. I look at what's happening U.S. news-wise because I trade during U.S. trading hours, and that's what impacts me the most, right? Are the things that are happening during the U.S. trading hours. So anyway, we've got some manufacturing news coming out at 10 a.m. Tomorrow. Wednesday will be a biggie. EU economic forecasts are coming out, but also the ADP non-farm employment change. This is kind of the precursor to the non-farm payroll report that's coming out on Friday. It isn't typically as impactful, but it certainly could be. Here in the U.S., we've got folks going back to work in a lot of, I shouldn't say a lot, in a few states. So it'll be interesting to see, what the numbers are versus projections. Depending on how you feel about that is really irrelevant. The numbers are the numbers, right? That's what we need to focus on when we're trading. How we feel about something happening, or what we think should be going, or the shoulda, woulda, couldas don't have any impact or shouldn't have any impact on us trading. I know mentally that's always going to be in the back of our mind, so we're going to have some sort of a bias. It's human nature, right? But we need to really be able to put that aside and step into a trading brain when we're trading and look at the things that are important to us from a trading aspect, which is why it's so important to have that trading plan and actually have that written documentation of what it means. What are you looking at? What are the filters things have to go through in order to spit out a trade at the end? If nothing comes out the bottom of that filter, we don't trade. That's part of having that trading brain on. So what we think should happen or how it should happen or anything else is really irrelevant. The purpose of knowing what news is coming up is to understand that there are days and periods of the days when there could be major things, kind of a major pressure on the market, causing that increased volatility and sometimes even causing reverses in direction and reverses in that intraday bias. It's important to know when the news is happening so that we don't just see something on the chart and go, oh my God, something's happening, I'm missing out. We want to know what's happening, what's coming up, so that we can take action and sometimes have inaction, because not taking action sometimes is the best course of action for us, right? For me personally, sometimes waiting it out is a little better, because trying to take action on that actual news event can be challenging, to say the least. So sometimes it's better to let the news happen and then make your direction post news. So anyway, let's flip back over here. So we've got the non-farm, the ADP unemployment change coming out. That's on Wednesday. Thursday, a lot of GDP reports over here. bank rates, monetary policy, that can be a big deal. Thursday, unemployment claims, and then of course Friday is your non-farm payroll here in the U.S. as well as the Canadian employment change. A couple of those with bank holidays in the Eurozone and over in England, and especially in the Forex market, that could have huge impacts, may even trickle over into impacting the amount of volume that we're seeing traded during the regular trading hours here in the U.S. So definitely a very interesting week coming up for us. Just we mentioned last week using a news calendar of some sort. There's one on Financial Juice as well that's pulled in here. You've got Bloomberg. There's all sorts of places to go for your news. Just find a news source that you like and can use consistently, and then stick with that. So over on the Forex side of things, switching gears, let's pop over here and we'll go to this one. What's happening in Forex? Well, as we get going in the day, we've got a couple things happening. We've got the pound as a weak currency coming into the U.S. session. It's been trending down over the last few hours. It's been a weaker currency in relation to our others. As we come into the U.S., it's still weak, but it's not having this divergence that we've seen. The euro and the USD and the yen, they've all been kind of trading together. They've been fairly flat, and then over the last probably hour or so, a couple hours, really hour or so, they've started trending down over here. So we've got some divergence. The USD, the euro, and the yen are all starting to push down as weaker currency. So we've got the pound that's a weak currency, and these others that are weaker as well. And the Swissie's in there as well. I always kind of ignore the Swissie, mainly because the volume's pretty light. The spreads are higher when you look at Swiss cross pairs, and there's just not as much volume on it. So it can be kind of spiky, like the New Zealand. Swissie and the New Zealand probably are two currencies that I don't look at that much, just because of the erratic natures of them, driven by market mechanics, driven by the fact that there's lower volume, which and there's, when there is volatility, it's crazy. It's like manic. So anyway, putting that aside, so what do we have out there? So we've got a lot of things that we can potentially be trading here in the marketplace. So what would we look at? Well, we've got so many things to consider here. An easy way to do it is just to pop over, which I can't drag that whole screen over to this side, but is to look at the indicators that we've talked about before. What's our average range? Let's look at the current day versus averages and just see which currencies still have some opportunity for us to move. USD versus the Aussie, US versus the CAD. Those are potentially some opportunities. If we look at the US versus the CAD, that one's moved 8 here. I can pull this one over. USD versus the Canadian, that's moved 85 pips for the day. Typically moves, into the 130 range, right? So that's potentially some opportunity, which it looks like it's breaking through as well here. So we look at the US versus the Canadian. We've got this range that's smaller than the typical range. So do we have 20 pips that we could potentially move there? Yeah. It's moved 80. Its typical range is into the 120 to 130 range. Well, really about 130, 127 to 132. That's probably average is about 130 there. Looking at 5-day or 15, right? And then we look at our volume detail, and we can see that the bias is down as well. When we're looking at this currency, we're seeing that we want to be buying Canadian, selling USD. The market's telling us right now that the bias on this is to be selling with that current trend. So we look at the volume versus the price action here, and we can see that trend is down as well. So all these things are confirming that we'd want to be selling USD versus Canadian. What else? If we look at the US versus the Aussie, same thing. Aussie versus the USD. So in this case, since the Aussie is our primary pair here, our primary currency, we'd be looking to buy Aussies and sell USD, right? We look at this and we say, well, we've moved 56 pips for the day, and average is about 80, 77 on a 5-day, 85 on a 15-day. Is there opportunity for that to move another 20 pips? Yeah, certainly looks like it. Again, as we've discussed before, doesn't mean it will. There's no guarantees, but things are setting up to say, hey, there's some opportunity here, and that's looking like it may work out for us. That's all we're looking for. We're just looking for something that gives us a slight edge. All those filters. In this case, we're looking at the first filter, which is currency strength. The second filter, which is let me pull this back over. Second filter, which is our intraday range, right? Our average trade range. The third filter, which is our volume detail. Those are filters, right? What drops out the end is a potential trade, and that tells us, we've got an opportunity to take action, and that gives us a slight edge. Then we stack the edge in our favor further by using money management, and then using a trade management process that allows us to win more than we lose on average. So all of those things stacked up is a whole piece of our trading plan and a trading edge. All right, so opportunities there. We can see which currencies are moving to strength, which currencies are moving to weakness. We showed a couple of opportunities here. If we looked at the euro real quickly, euro versus the CAD, another one. That's potential opportunity out there, but the euro started trending down as we came into the U.S. session. U.S. versus CAD here, we've moved 107 pips on 150 pips. On 155 on the last 5 day, 147 on the last 15. Is there opportunity for that to move another 20 pips? That's all we're asking ourselves. We don't have to overcomplicate it. So and then so in this case, oh crap, did I just close that down? I just closed anyway, sorry. So in this case, we have a lot of, so previous days we've come into the Forex session and we've had no opportunities. Today we're coming into the Forex session and we have a lot of potential opportunities, and a lot of different ones to consider given the fact that we've got pretty nice divergence as the U.S. session begins right now. What do we do with that? Well, we have to weigh it out. So now we have to determine, coming back to your trading plan, we have to determine how many trades are we willing to have on at any given time. Do I want to be able to take trades on the same currency, multiple trades on the same currency? So we talked about, the USD, we looked at it versus the Aussie, we looked at it versus the Canadian. Do I want to take the USD Aussie and the USD CAD, or do I only want to have a trade in one currency, right? So, maybe I have to choose now between the US versus the Aussie and the US versus the CAD. Which one do I feel better about, and then take that trade? And then of course we have Euro opportunities on Euro cross pairs as well, and even pound cross pairs. I didn't even get into the pound cross pairs. So, or the pound pairs rather. So there's a lot of opportunity out there today. This is where another piece of the trading plan comes in. Are you comfortable? Because if we take a whole bunch of trades on U.S. versus various things, or Canadian, or Euro versus various things, if the Euro suddenly switches, we could be out of all of our trades and get stopped out for a loss, right? So think that through. We talked about the entry process. We talked about choosing the trade, but now we've got multiple good-looking trades to choose from. How many of those do we want to take, and do we want to take them on the same currency, with the same base currency, or the same currency involved? How many of the same currency involved trades, currency involved pairs, how many trades on the same currency involved pairs could we potentially take? It sounds almost like a tongue twister. So anyway, more considerations there. All right. I didn't click the button on any of these, by the way, because we've already passed what the breakout box was. This would have had to have been done 5 minutes ago, and obviously we're talking. So I think that's it for Forex. And I'm starting to get longer than I needed to get today because I've got to go. So let's jump in here real fast. Let's talk about this. Key levels on the S&P, key levels on crude, key levels on gold. These are 4-hour charts, and we're going to get into the bounce style trades as we get further into the week. I'm going to keep this short today. So E-minis, let's start with E-minis. Bias on the 4-hour is long. So we have a long bias on the 4-hour still. It did pull back considerably, over really the last week. It's pulled back a lot here, but the bias is still long. This hasn't flipped over. Now, if we go to the 30-minute, we're in a downward trend. The bias is telling us to go short. So we've got a mixed bias there. Do with that what you will. Remember, we talked a little bit about that last week and in previous weeks as well. You've got to figure out what your actual trading plan tells you to do when you've got mixed bias on various time frames. And that bias is going to be dependent upon the time frames that you're actually trading. If you might be looking at the 30-minute bias and then taking trades on a 5. Just totally depends on what your trading strategy is. But suffice it to say, 4-hour bias is long, 30-minute bias is short right now, so they're mixed. Coming into the new session, remember, we've got a lot of news coming up later this week. We've got a key level here above us at 2808, 2810 area. And again, remember, I've talked about the fact that it's an area. It's not. We talk about specific levels, but when we look at taking trades, there's kind of a top edge and a bottom edge, and I think that'll become a lot more important, especially today as we start looking at bounce trades. Well, not really today, this week, as we start talking about bounce trades, because we're really at that point when we're doing bounces, we're trying to pick a potential top or a potential bottom to bounce from. But the key area is up here, 2810. We're sitting right at 2800, so big hold number also is important to us. So we've got 2800, 2810 as some key levels that we might be struggling around, at least until we get into the news later this week. But I don't think it'll just sit in a 10-point range. I'm not saying that. I'm just saying, expect it to struggle a bit, and then we'll see where it goes from there. Over on crude 4-hour trend is still down on the 4-hour. However, on the 30-minute, we're into a long bias here as well. 20 was a huge point of support for us. Took forever to break below 20. It bounced a lot there. Broke it, went down as low as 6. It's rallied a bit. We're back here around 20 again. But the biases are mixed, so do with that what you will, depending on the time frame you're trading. Maybe they're not mixed. Just keep that in consideration. But 20, big number up here at 20. So we've been trading below it for quite a while. If we can push to 20, that'll certainly be a key area for us to watch, depending on our trading strategy. And of course, we are going to get into bounce style trades later this week, and we'll talk more about that. Over on gold, gold is on a 4-hour. The bias has turned short. So 4-hour bias is short. If we go here to the 30-minute, the bias is long. So gold is mixed as well. So we have a very mixed market coming into this week. Now again, there's a lot of news this week, a lot of key news, a lot of really high impact news, or at least potentially high impact news. We've got to keep that in mind. It's a mixed market right now. It won't be a mixed market as we get, I can't say definitive. Who knows, right? It probably won't be a mixed market as we get later in the week and we get through some of the manufacturing indexes and employment claims reports, if I can say that. So just keep that in mind. A lot of news coming up. So we're going to get more into breakouts or bounces as we get later in. Last thing to look at real quickly is crypto. Let me change this back to my dark color scheme here. Looking at crypto, we're still long bias on Ethereum, long bias on Bitcoin. However, we did pull back quite a bit. Remember last week, end of last week, we really rallied through. We broke through 9,000 on Bitcoin, which is a big number for it. We broke through 220 on Ethereum, which is a big number for ETH. Repelled off of that, it closed above it, but then it just simply couldn't hold it up. Struggled around 200, or around 210, 207 area on ETH, and now is down here at 200. We seem to be finding that support level here at 200. So we're looking at buying opportunities on Ethereum as it continues to be a long bias on the 4-hour period. Same for Bitcoin. If we're looking to buy those pullbacks, we're looking to buy down here 8,500, 8,700, 8,800 areas as we look to continue to move to move north. We do have that Bitcoin halving coming up. If that has the impact that we think it will, that could potentially be a catalyst to drive Bitcoin higher. As Bitcoin moves, typically our other markets will move as well. They kind of move, it'll drag the other currencies up as well. Potentially, I mean, Bitcoin halving could be a total non-event. I don't know. There's a lot has changed in crypto markets. A lot has changed, and changed for the better. You've got a lot more volume coming into the crypto markets. You've got institutions that are involved. You've got banks starting to actually accept it and exchange it. And you've even got governments talking about moving to a digital asset. And I say digital asset, and we've already got digital dollars, euro, already in that we transfer it digitally, but an actual blockchain digital asset for those markets, and that'll be interesting. That'll be really, really, really interesting. And it just continues to add to what occurs there. And I think if that's opinion for another time. When we do some maybe crypto specific stuff. All right, so I got a bolt. I got to get out of here. Kept it short today, fairly 10 minutes shorter than I typically do. Remember, just have a plan. Stick to your plan. All the things that you look at as far as indicators go are just think of them as filters. They're filters. They don't mean that anything is going to happen. None of those things predict the future. Even the, quote, leading indicators, predictive indicators, they don't predict the damn future. No matter what anyone tells you, nothing predicts the future. No indicator is better than 50-50. That's kind of how the market is. But we stack stuff we stack the deck and we put it through enough filters, we can get something that comes out the bottom that gives us that slight edge. All we need to be able to do is have a slight edge. Once we have that slight edge, money management, trade management, that helps us exploit it and helps us become profitable over that longer term. So anyway, that's it for now. We're going to get into breakout stuff. Not breakout. I keep saying breakout. We're going to get into bounce style strategies tomorrow and talk about what a bounce trade is, how it works, what to look at, pros and cons. All right. So have a great day. We'll talk to you soon.